Hello, folks, and welcome. I am John Najarian, and this is 3 at 3. 3 at 3, as you know, we try to cite the best of what we've seen that day for unusual option activity, or UOA. We also sometimes are showing you some of the trades that have worked or not worked and why. And today we're going to show you a couple trades that have worked, but that you need to be aware of how volatile the market is. So we're going to show you how they've moved the stocks that we've cited, and then perhaps how you can't just be lackadaisical. You have to be active if you're trading, especially short-term options. But let's get started. This one, it'd be hard to screw it up. This one from last Wednesday was RVMD, Revolution Medicines, and they had purchased a lot of puts. As you see, the November 25 puts with the stock at 31. As usual, I wouldn't have purchased the puts that were that far out of the money. But here's how it worked. Let's say that you did purchase the 25 puts. Well, the stock slammed down on a report that their cancer treatment didn't work as well as hoped. And somebody that bought 500,000 short share equivalent, because of course 5,000 puts represents 500,000 shares short, did pretty well, because those puts went from $2.85 to over $9. So 3 times. So if, for instance, let's say, since every option is for 100 shares, those were $285 a piece. So those puts, November 25 puts, the right to sell at 25, was costing you $285 for each 100 shares. If you purchased a 10 lot representing 1,000 shares, you had $2,800 invested. And that $2,800 turned into $9,000. All right. So in other words, less than $3,000 invested became worth $9,000. And that's on a 10 lot. Of course, if you were lucky enough to have a 100 lot, a $28,000 investment went to $90,000. So these are the sorts of things I think you should be aware of, is that there are big moves in the market all the time. But you do need to take your profits. You can't just wait around. This, I would say, the baby's born, meaning that whoever bought these for the birth got it. And so why wouldn't you take your profits when a big move like that happens? I think most people have. All right, we have others. IWM from also Wednesday last week. It was at 172.50, fell down to 166.30, but that's not the whole story. So that's $6. But take a look at the low of the day, 164.60. So approximately $8 lower than where the stock was just last Wednesday. Bang. Another one? Sure, why not? SoFi. SoFi was at $7.86. They were buying the 3rd of November. That is an option that doesn't expire this week, but next week, the 3rd of November, expiring 7 puts. They bought 25,000. We told you, of course, that means 2.5 million share equivalent, short, hands out towards you, short, palms towards you, rather. That means you're selling, shorting. Well, they fell below 7 today, did the shares of SoFi. As you see there, big yellow arrow, folks, take a look. They fell down to $6.97. So those puts that were 28 cents that went to 48 cents now are much, in fact, they went in the money. So they did much better even since. And if you're somebody that bought the 750 or the 8 puts, all the better. Bang. And just because I'm feeling generous, I'm showing you a third winner from last week. This one is from the 20th, so that would be Friday. Polaris, PII, Polaris. maker of snowmobiles and jet skis and all that kind of fun stuff, off-road vehicles. Well, Polaris, January 90 puts, the stock was 93.88. As you see on your screen, 92.71, but look at that big yellow arrow again, down there at 91.68. So $3.20 in further towards where we would like to cash out of these. Bang. Gotta love that. So fell by over $3 in just one session. Bang. That's why I love trading options. All right, let's dive into today's fresh meat, shall we? Letter X, which is U.S. Steel, $31.66. They buy 11,500, which is 1.15 million share equivalent of the November 33 calls. It's a big bet on the upside, a bet that is $1.40 approximately above the market. Now, you could buy at the money or you could buy those. Either way, I like the way it's setting up in letter X, which is U.S. Steel. Second trade, TLT. Are they betting that interest rates go up? No, this would be actually a bet that interest rates might ease a little. And by the end of the year, December, maybe we actually see the TLT move up. And as the TLT moves up, rates move down. They're inverse, as you already know. So 84.70, they're buying the 90 calls. I would like buying the 85 calls and selling a higher strike call against it. 1-to-1. As long as you maintain that 1-to-1, you don't have additional risk to the upside. Third and final is Bloomin' Brands. Are these underwear? No. Those are bloomers, but no, this is Bloomin' Brands. So stock's 23.35. They're buying the November 25 calls. They're about $1.70 above the market. So you can choose to buy those out of the money calls for 45 cents, or you could say, you know what, I'm going to buy an at the money call and sell an upside call against it. That's the way I play. Now, again, it's your money. You decide. I'm perfectly happy hitting singles and doubles, folks. That's what I like to do because I like consistency. And if you like consistency, you may want to consider that kind of trade rather than always just buying the out of the money call or out of the money put, whichever side. But again, I can't pull the trigger for you. I can tell you what I do and why I do it because I've been in this business for 42 years. Something you should consider when I'm offering that advice. Bang! Have a great day, everybody. I'm going to tell you to go see marketrebellion.com/get started for more. That's marketrebellion.com/get started for more. Thank you for joining me today. I'll see you tomorrow.